Good afternoon, friends. This video we are going to capture the important and the debatable point as on date in the market, whether interest is leviable on gross tax liability or net tax liability under section 50 subsection 1 of CGST Act 2017. This debate is going on in the light of recent CBIC tweet which is coming out in the market on 15th of February 2020. These tweets are clearly saying that interest is leviable on gross tax liability, and the newly inserted proviso under section 50 subsection 1 of CGST Act, which talks about that interest to be charged on net tax liability is going to be applicable prospectively. At the same time, there is interdepartmental directives for collection of interest, and that interdepartmental directives also talked about that interest to be charged on gross tax liability. So in this debatable situation, we are discussing and we are analyzing this particular topic, whether interest to be charged on gross tax or net tax liability. Let's take an example that you are a taxpayer and you got 1 crore rupees tax liability. Let's say for a particular month, September 2017. In the same month, you got 80 lakh rupees, 80, lying in your e-credit ledger. You have to pay only 20 lakh rupees in cash. You could not pay this net amount of 20 lakh rupees, could not file return also. So you filed your belated return in the month March 2018 after payment of belated cash component of 20 lakh. Question comes, are you supposed to pay interest on 20 lakh rupees, which is net tax liability, or you are supposed to pay interest on 1 crore, which is gross tax liability? There was Telangana High Court judgment in the case of Mega Engineering and Infrastructures Limited. In that particular judgment, it was held that interest to be charged on gross tax liability, and this was the provision under section 50 subsection 1. In that particular judgment, the petitioner had emphasized that the GST Council made a recommendation in 31st GST Council meeting held on 22nd December 2018, wherein GST Council has principally decided that interest to be charged on net tax liability. As per recommendation of GST Council in 31st GST Council meeting, a new proviso got inserted by Finance number 2 Bill 2019 under section 50 subsection 1, and which talks about that interest to be charged only on cash component, which is the balance tax to be paid. So this proviso got inserted, but irony is that this proviso is not yet operative, effective, because this particular clause is still subject to a notification as and when central government notify this particular proviso. Having said, as on date when we are recording this video, this newly inserted proviso still need to be made effective. Having said that, now we are discussing the recent judgment which is coming from Madras High Court, and this is a very good judgment, I must say that. and this judgment coming from Reflex Industries Limited, Madras High Court judgment. In this judgment, what is being considered, and I'm of the same considered view which I'm talking about. See, you got 1 crore rupees liability and you got 80 lakh rupees lying in your e-credit ledger. You were supposed to pay only 20 lakh rupees. Question was, if at all interest liable, which is of course liable, automatic under section 50 subsection 1, is going to be applicable on net tax, which is 20 lakh, or gross tax, which is 1 crore. In this particular judgment, a newly inserted proviso was considered, and was considered in a manner that this newly inserted proviso is correcting the anomaly in the provision existed before. So what is being stated, this newly inserted proviso is giving a platter that interest to be charged only on net tax liability. Now the next question comes, whether this newly inserted proviso going to be applicable prospectively or retrospectively. Having said that, we all know this newly inserted proviso is yet to be effective. It is not effective as on date, though it is a part of statute as on date, but not effective as on date. What Honorable Madras High Court has considered, since this newly inserted proviso becomes a part of statute, and this was made part of statute effective from August 1, 2019, White Finance number 2 Bill 2019. Though it is not effective as on date, but they have considered is a part of statute now. Now this particular proviso is correcting the anomaly which was existing before under section 50 subsection 1, whereby interest supposed to be calculated on gross tax liability, now stated to be on net tax liability. So what Honorable High Court, Madras High Court has said, since this proviso is clarificatory in nature, hence going to be applicable retrospectively from July 1, 2017. I would like to highlight one important parameter in that Telangana High Court judgment in Mega Engineering and Infrastructures Limited. What Honorable High Court has stated, 80 lakh rupees which was lying in e-credit ledger, since it was not appropriated because as a taxpayer you could not file your return, hence they have concluded that interest to be charged on 1 crore gross tax liability. Now let me clarify and what should be the case. Per my view, interest should be charged only on net tax liability. And I am of the view this Madras High Court judgment is really going on right footing. This newly inserted proviso, though it is not operative as on date, but the part of statute from August 1, 2019, clearly depicting the picture that interest to be charged on belated cash component, which is 20 lakh in our example, which was paid in March 2018 when you are filing your March 2018 return, which was pertaining to September 2017. Why should be retrospective? For simple reason, this proviso is clarificatory in nature, and we got subtle legal jurisprudence whenever any proviso which is giving clarification of your prior provision existing, then that should be considered as clarificatory and applicable retrospectively. Having said that, now this 80 lakh rupees which was lying in a e-credit ledger could not be appropriated for simple reason, return was not filed by the taxpayer, because the taxpayer is not given option to pay part. Had it been given, he could have paid 80 lakh rupees as a part payment, and balance 20 lakh rupees would be lying to his account to be paid at a future date. Hence, interest to be charged only on 20 lakh. What Honorable Madras High Court has said, that this interest to be charged only on 20 lakh, which is belated cash component, whatever ITC which was lying in the e-credit ledger of the taxpayer, it was already with the tax department. tax department for simple reason that this taxpayer has paid this amount to the vendor and vendor has deposited the tax to the government exchequer. He could not file return, he could not appropriate this e-credit ledger for simple reason he was not given window to make part payment. That's the reason he could not appropriate. So, conclusion coming out from Madras High Court judgment that interest to be charged only on belated cash component, which is 20 lakh rupees, and not on ITC, which was already lying with the tax department. This judgment is really on right footing. Now, only point what we are all are looking for. CBIC has given recent tweets, even their interdepartmental directives, they are talking about that interest to be charged on gross tax liability, creating a hue and cry in the trade, industry and commerce. We have seen the Income Tax Act, we have seen the other indirect taxes wherein we always see interest to be paid only on net tax liability. It is for the simplicity we all are talking about, ease of business we are talking about. Government must come out with a circular or a clarification that this interest which is supposed to be paid must be paid only on belated cash component, that is net tax liability. So this is my view which I am concurring with the Madras High Court judgment. Secondly, I would like to highlight, in case you have taken ITC which is wrong availment but not utilized, in that case also interest is not leviable. If you are reversing that wrongly availed credit, what I am saying, if you have taken credit which is the wrong credit but not utilized and then you are reversing such credit, then interest should not be leviable, because under section 50 subsection 1 interest will come into the picture only when ITC component gets adjusted with the tax payment. Unless it is getting adjusted, interest is not leviable. So wrongly availed credit before utilization reversed by the taxpayer, interest should not be charged under section 50 subsection 1. As a conclusion, I am of the firm view, and I am sure and looking forward from the government side, they must come out and help the trade with a good and simple tax, ease of business. Interest must be charged only on net tax liability. Thanks for watching. Thank you very much.